Bismillahirrahmanirrahim. Assalamualaikum and good day, everyone. Today, our Group 4, will be discussing small and medium enterprise, SME, in Malaysia, which play a vital role in the country economic development. SME contribute significantly to employment opportunities, business growth, and national income. They represent the majority of business establishment in Malaysia and are important drivers of innovation and entrepreneurship. In this presentation, we will first explain the characteristic and roles of SME in the Malaysian context. Then we will discuss three major difficulties and obstacles the SME face when trying to secure bank credit, which is an important source of financing for business growth and sustainability. First, I would like to introduce our team. First, I would like to introduce our teammate Fareez. He will explain about the role of SME. And second, Syahmi. Syahmi will be discuss the difficulty and obstacles faced by SME. Third member of the team is myself, Azmilia. I will explain regards to the characteristics of SME. Our next member is Hanisah. She will do the conclusions. And our last team member is Amy. She will also presenting and discuss the difficulty and obstacle faced by the SME. Okay, let us begin by understanding the characteristic of SME in Malaysia. So, main characteristic of SME in Malaysia is like business classified based on their annual sales turnover and number of full-time employees. And also, it's operate in sections such as manufacturing, services, agricultural, construction, and retail. Based from the research, we found this characteristic. Small scale operation, SME usually operate with limited capital, smaller workforce, and modest production capacity compared to the large corporation. Number two, owner managed business. Most SME are managed directly by the owner or family members, where decision making centralized is less formal. Number three, limited financial resources. SME often rely on personal saving, internal funds, or small loans due to limited access to the external financing. The other characteristic of SME is like flexible and adaptive. SME are generally more flexible and can quickly respond to change in customer demand and market trends. There are also local market focus. Many SME primarily serve domestic or local markets, although some are involved in export activities. SME also tend to use more human labor rather than advanced automation due to budget limitation. And compared to the large firm, SME may have limited access to advanced technology, research, and innovation facilities. That's all from me. Thank you.
Assalamualaikum. My name is Muhammad Fareez bin Norrazali. My student ID is 2024918853. Today I will explain about the importance of small and medium enterprises or SMEs in Malaysia. Focusing on three main points: their economic contribution, employment generation, and support for the local communities. So let's look at the economic contribution of SMEs in Malaysia. SMEs are extremely important because they make up about 97% of all business establishment as of 2021. This means almost every business we see around us, such as local cafes, clothing stores, small business, small factories, and online businesses are part of the SME sector. SMEs contribute more than 500 billion ringgit Malaysia GDP. And this huge contribution shows that SMEs are one of the key drivers of Malaysia economy. Without SMEs, the country economic growth would be much slower. Next, to the point number 2, SME also play a major role in employment generation. SMEs provide jobs to around 70% of Malaysia workforce, and it's about 66% of the country's total employment. This means millions of Malaysians depend on SMEs for their income and daily living. SMEs create a big opportunities for fresh graduates and skilled workers, and even people in rural areas. They help reduce unemployment and improve the standard of living for so many families. During difficult economic times, SMEs are also important because they continue to create smaller scale job opportunities that help support the economies of Malaysia. Finally, SMEs strongly support local communities. As point number 3, unlike large multinational company, SMEs usually operates within local areas and maintain close relationship with the community. They hire local workers or use local suppliers and even provide services that must meet the local needs. Because of this, SMEs help provide stimulates regional development and spread economic benefit more equally across different states and towns in Malaysia. For example, a small local restaurant not only earns income for the owner, but also support nearby farmer, delivery workers, and local customer.
Hello everyone, my name is Amylia Mazlin, Anak Dublin. My student ID is 2024-135485. Today, I will discuss two major difficulties that small and medium enterprises or SMEs face when trying to secure bank credit. The first challenge faced by SMEs is the lack of collateral. Collateral refers to assets that a business can pledge as security when applying for a loan. Banks usually require collateral because it helps reduce the risk of lending and provides protection if the borrower fails to repay the loan. However, many SMEs do not have sufficient assets such as land, buildings, or expensive machinery that can be used as collateral. This is especially common among newly established businesses and service-based companies, which often have limited physical assets. Some SMEs may have valuable knowledge, skills, or innovative ideas, but these are not always accepted by banks as loan security. Because of this, banks may consider SMEs to be higher risk borrowers. As a result, their loan applications may be rejected or they may receive a smaller loan amount than requested. This limits the ability of SMEs to expand their operations, invest in new projects, or improve their business performance. Next, the second major challenge is weak financial records. When SMEs apply for bank financing, banks need detailed financial information to evaluate the business and determine whether it can repay the loan. This information includes financial statements, accounting records, cash flow reports, and other supporting documents. However, many SMEs do not maintain proper accounting records or have incomplete documentation. Some business owners may not regularly update their financial records, while others may not prepare formal financial statements. In some cases, personal and business finances are mixed together, making it difficult to obtain an accurate picture of the company's financial position. Without complete and reliable information, banks face difficulties in assessing the financial health and repayment ability of the business. This increases uncertainty and makes banks more conscious when approving loans. As a result, SMEs with poor financial records are more likely to experience delays, stricter requirements, or even loan rejection. Therefore, weak financial records remain one of the key barriers preventing SMEs from obtaining bank credit.
Hi and Assalamualaikum. My name is Syahmi Nabil bin Jamil and my student ID is 2024771387. So today I will be presenting on the third reason of the difficulties and obstacles faced by small and medium enterprises or SMEs in securing bank credit. So the third reason why SMEs often face difficulty obtaining financing is the higher perceived risk from the perspective of banks and financial institutions. Before approving a loan, bank evaluates whether a business is capable of repaying the borrowed money on time. Compared to large corporations, SMEs are often viewed as riskier because their financial position may be less stable and more vulnerable to market changes. So one major factor is unstable cash flow. Many SMEs experience irregular income, meaning their monthly revenue may rise and fall significantly. For example, a small cafe or food business may earn high profits during festive seasons or weekends, but experience lower sales during other periods. So because its income is unpredictable, banks may worry that the business could struggle to make consistent loan repayments. So another factor is dependence on a limited number of customers. Unlike large companies that have thousands of customers and diversified markets, some SMEs rely heavily on only a few major clients. This creates concentration risk. For instance, imagine a small printing company that receives 70% of its income from one corporate customer. If that customer changes supplier or faces financial problems, the SME may suddenly lose most of its revenue. Banks see this dependence as risky because the business survival may rely on circumstances outside its control. SMEs also often have a short business history. Many small businesses are newly established and lack long-term financial records. Banks usually prefer borrowers with several years of proven performance because this allows them to assess profitability, repayment behavior, and business stability. A startup or newly opened business may have a strong idea and potential, but without historical financial data, banks may find it difficult to evaluate the true level of risk. In addition, SMEs may be more vulnerable to economic downturns and unexpected events. Large companies generally have stronger financial reserves and broader market across, allowing them to survive difficult periods more easily. SMEs, however, may struggle when faced with rising costs, inflation, supply chain disruptions, or sudden drops in demand. During the COVID-19 pandemic, for example, many small retailers and tourism-related businesses experienced severe cash flow problems, and some were unable to continue operations. Situations like this reinforce banks' concern about lending to SMEs. Because of this perceived risk, banks may become more cautious. They may reject loan applications, approve smaller loan amounts than requested, charge higher interest rates, or impose stricter conditions such as collateral requirements and detailed financial documentation. Therefore, while SMEs play an important role in economic growth and employment, their financial characteristics are often cause banks to view them as higher risk borrowers, making access to financing more challenging. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Fatin Hanisah Binti Hamsah. So, as for the conclusion, Malaysia's economy really depends on the strength of its medium enterprise. It is very strange that these small and medium enterprises are not getting the financial help they need, even though they are the main source of jobs and growth in the country. To fix this problem, the way small and medium enterprises and banks work together needs to change. By just doing transactions, they need to work together as partners. For the medium enterprise, this means they need to start using computers and be more open about their money instead of using all manual system. For the banks, they need to start looking at how money business makes rather than just what asset is owned when deciding if they should give a loan or not. They can use a lot of data and computer programs to help them make this decision. At the end of the day, helping small and medium enterprises get the money they need is not a problem. For the banks, it is something the whole country needs to think about so that the small and medium enterprises, which are the backbone of the company, can stay strong and handle the demands of the modern economy. In mapping out the landscape of the Malaysian economy, we consistently arrive at a singular, undeniable truth that the small and medium enterprises are not just market participants. They are the fundamental heartbeat of our national growth, accounting for nearly all business establishments and employing roughly half of our workforce. The vitality of our macroeconomic future is directly tied to the health of our SMEs. The credit barriers we analyzed, specifically the strict demands for property collateral, the data gaps from informal people, and the high risk tied to a single owner are not just a minor problem. They show a major mismatch between old school banking rules and today's fast-moving business world. When traditional banks rely only on history and physical assets, they accidentally punish modern service-based and innovative SMEs. These modern businesses trade great ideas, digital reach, and hard work rather than land and buildings.